We aim to play a role in bringing social media and Web3 together in order to broaden the use and adoption of crypto and blockchain technology. Binance was among several crypto-focused firms listed as investors backing the Twitter deal in an SEC filing back in May.
Elon Musk finally takes over Twitter, and cryptocurrency-based companies were a big part of the transaction. New possibilities are opening up for cryptocurrencies, but not only cryptocurrencies, but Web3. There are talks about Elon Musk deploying Web3-based applications for payments on Twitter. Raoul Pal talks about the potentials of Web3 and cryptocurrencies, how this could become the biggest thing in the future. If you've not subscribed to this channel, you're missing out on the best interviews from the best microeconomics gurus. Subscribe and click the notification bell so you never miss out.
So this is the big debate. I'm on the opposite side. So that everybody thinks that inflation is the enemy. Inflation is one of the most backward-looking economic indicators, and really the inflation now was baked in the cake 18 months ago. So my job in global macro analysis is to look forward 18 months and say, what will the world look like? Just the rate of change comparison of price changes is likely to lead to very low inflation numbers. Doesn't mean prices come down. But then I look at the oil price come down from $120 to, where are we now, about $80. We've seen stuff like steel down 70%, lumber down 70%. Almost all commodities have come down. So those supply shocks have gone. The other supply shocks you used to be able to see in shipping prices and stuff like that. Well, shipping prices have come down. So almost all the forward-looking indicators of inflation are coming down. So now the market's fixated on wages and rents. House prices are coming down. We're already seeing that. Demand for housing has collapsed. And housing and wages are always the longest lags. So over the next 6 months, we'll start to see them roll over too. So my guess is if we were to have this call in a year's time, inflation is closer to 2% than it is to 9%, which is a shocking turnaround in events. I think inflation goes negative. So if I'm right that growth is imploding and inflation is about to evaporate, then the probability of the central banks coming in yet again to try and support growth goes up exponentially. The flip side of this is, let's assume that the moment that there's any sort of recovery anywhere, that oil prices go up because there's a supply issue in the oil markets and some of the commodity markets like copper. Yes, that's possible, but you have to have really high oil prices to have the same amount of inflation. So could inflation be sticky at around 4 or 5%? That's where the market is talking about it on Twitter loudly, all the economists. But I'm looking at the 5-year break-even inflation rate, where inflation rate is expected by actual market participants in 5 years' time, and it's currently at 2.2%. 1 year break-even inflation is 1.75. So the market's actually pricing in something very different than the narrative.
Raoul Pal thinks the inflation is being overshot. He talks about how the data used for preparing the inflation index is outdated. In economics, such data are referred to as lagging indicators. He argues that we do not have an inflation problem because the figures coming out from forward-looking indicators show that deflation would soon be the issue the Fed is fighting. Currently, commodities are crashing down. We're seeing a deflation in housing materials, such as lumber, and metals such as copper. Oil, which correlates with energy, is also down. Crude is down by 0.89% last week to settle at $84.08. And what's happening in the housing market? Home construction has slumped this year, taking out 1.37% from the US GDP in the third quarter. This is the steepest fall since 2007, leading up to the 2008 mortgage-induced recession. There's an anticipation for more mortgage rate hike, which would go hand in hand with the expected Fed interest rate hike. As of last week Friday, the 30-year fixed mortgage rate stood at 7.8%. This is the highest it has been since 2002. This indicates that the market is constricting as a result of the high mortgage rate. In conclusion, Raoul Pal is sure that the Fed is going to overshoot because they're not reading the data well. So what about cryptocurrencies? That's what he talks about next.
I've never seen anything like it, personally. It's kind of a little bit like the internet, but it's just, as I said, faster paced and actually larger in scope, which sounds crazy, but it is, because it accrues value itself to these protocol layers. So there's this massive value accretion that comes. So if I compare where we are now, call it $1 trillion of asset valuation in digital assets, well, almost all the traditional asset markets are 200 to 300 trillion. We're going to get there in probably 10 to 15 years. I mean, this will be the fastest accumulation of value the world has ever seen. Fastest and largest. Bigger than oil, bigger than the internet. It's a very, very different thing. It's quite the phenomena. So the point being is, as soon as the macro clears up, everybody from you guys, I mean, we've already seen Meta moving further along, faster, they're launching stuff. Everybody's investing in VC in this space already. So everyone's getting a first look. What's happening? Where is it going? How do we get involved? So the VC money of $60 billion that went in the last 18 months, because of the speed of the cycle in crypto, we're going to see a whole lot of products and new changes and new innovations coming in the next 6 to 12 months. And we'll move the whole narrative forward exponentially yet again.
According to Raoul, cryptocurrency is the fastest growing market by a long way, and the data seems to agree with him. Last year, Bitcoin in particular and cryptocurrencies beat other asset classes to become the most appreciated asset in the world. While Bitcoin gave an annualized return of about 230% based on a 10-year average, traditional assets did not provide as much value. The Nasdaq, for example, retired just 20% on yearly average from a 10-year performance, making the Nasdaq the second best performing space. This is a huge difference between the two assets. There's no doubt that the crypto space is growing and full of potentials despite the year's market crash. Commentators such as Peter Schiff have expected that Bitcoin would not last this long, but Bitcoin has performed much better than gold, which Mr. Schiff has been bullish on. According to Raoul, cryptocurrencies would be bigger than all the other markets, even bigger than oil. While other industries are slowing down, cryptocurrencies are just begging to explore their potentials. It's arguably the fastest growing market, though it has entered into a slowdown due to the ongoing market conditions.
It's really clever how this evolved. Again, this is the crowd doing this. You know, it's A16Z who essentially pushed the Web3 narrative because it took out the word currency that was upsetting everybody in Capitol Hill. Once you take out the word currency, it's less threatening. Web3, sure. Everybody wants, you know, an improvement on Web2. Like Web2 is an improvement on Web1, so it's easy. So it's different narratives. And again, this is why these decentralized networks are so virulent, is because narratives can shift and find its path like water. So we've got three paths: the financialization of this, which is digital assets. So when I have my fund of hedge funds, Exponential Age Asset Management, what do? We're a digital asset manager. When I talk on Science Magic Studios to pop stars, sports teams, corporations, it's Web3. And when you talk to people who are really fearful of the financial system, the people who want a way out, a parallel path, you talk about cryptocurrency. And it kind of works.
The big discussion now is the possibilities Web3 would bring to crypto, finances, and every other space on the web. This is where all the talent want to be. It's reported that its development has become a career of consideration for up to 60% of professionals. There's now a slew of funding going on into blockchain-backed Web3 technologies. Would these advancements be accepted and adopted, especially with the recent regulatory issues? To keep an eye on the latest developments in this space, you need to subscribe and click the like button. Thanks for watching.